Okay, we've got quite a crowd already. We might kick it off now. So anyone that turns up late, we will have the recording. They'll be able to join us at that point. So welcome everyone today to the Business Endgame, Successful Succession Planning. It's actually a kind of topic that has come up quite a lot over the last few years, given everything that we've been going through with COVID. So just to get us going, for those of you who haven't met me before, and I think online, probably I've met half the people online and the other half I haven't yet met before. Welcome to joining maybe for the first time, one of our webinars that we run here at Smart Business Solutions. My name's Shannon Smith. I'm the founder and managing director of Smart Business Solutions. Probably like many of you, I founded Smart Business Solutions from the spare room at home. Fast forward a number of years, we actually celebrated our 15th year in business last year. So we have been around for quite some time now. Smart Business Solutions, we provide accounting and tax services and work a lot with our clients and around the advisory space, not just accounting and tax. We also have a financial planning as well as mortgage broking. So we try and be a bit of a one-stop shop for a lot of our clients, so you don't have to go and see a number of different service providers as well. So I'm being joined today as well by Paul Cunningham. He's an associate within Smart Business Solutions, a chartered accountant, and he's done a lot in this space working with clients as they progress through their businesses. So what do we want to talk about today? Now, I guess I'll probably tell you what motivated me to actually come up with this webinar. What I was hearing from a lot of clients, we had in 2020 COVID, and we all came into 2021 thinking it's a new year, COVID's behind us, and let's start the new year off on a high. And that got very quickly squashed, especially for those of you in Melbourne, and furthermore, those of you down here on the Mornington Peninsula, where we all discovered that we were part of metropolitan Melbourne again, and faced a lot of those lockdowns and things like that. We then came into 2022, again, all of us wishing for a year without COVID. And whilst we didn't have a lot of those lockdowns, there were so many business challenges that came out as a result of the flow-on effect as well. What I found a lot of my clients were saying to me towards the end of last year is, I'm done. I want to get out of my business. I want to sell my business. I'm exhausted, and a lot of those. And so I started to, I was really working with clients saying, well, that's great, but what's your plan B? I don't even think I said it that politely. I actually maybe added a few things to that. But what is that plan B? And, and in the state you're in now, is that a really good idea? So that kind of motivated me to say, we want to put some tools around for you so that you do have that plan B, you do have that choice. And you may actually choose to do nothing with it, or you actually may choose to go down that path. So that's really kind of what motivated today. So we're going to look at some of the different challenges that you've been faced with and mindsets kind of around that you might need to overcome, and then help you focus on how can you get back in control of those particular areas, how can you mitigate some of the risks that you may be facing, and really get to the best outcomes for your business, which actually might mean that you might fall back in love with your business. So, and so there's those kind of opportunities as well. So that's kind of what we want to look at. That's what motivated me to kind of put this webinar together today, to actually say, look, it's all great to say that we're all exhausted. We've all been on that journey the last few years, but what can we do that's productive so that, if you do want an exit, there's a plan around it, and it's not just a case of jumping in there. So some of the external challenges that, have been facing business owners over the last few years, COVID-19 and lockdowns. Now, just when we thought we're getting out of COVID, we've got high inflation, increasing interest rates, and a lot of the pressure that's putting on business owners, whether it be business loans, but also the flow-on effect. Margins are getting a lot tighter, whether it be because of supply chain, wage growth that you've had, and just increasing costs and lower profitability. There's a number of business models that we're seeing are really being challenged in this time. And as I mentioned before, the owner burnout. So it's really something that we've been seeing a lot of these challenges. It's, we kind of, they're coming at us left, right, and centre. We all knew that operating a small business was never going to be easy. It was going to give you, more time to yourself, more life, flexibility in life. And I think, there's a lot of business owners that are going, hang on a minute, I don't think I have that much more flexibility, and I'm not actually getting any more time. So there's been a lot, one thing after the other. And some of those challenges, will your business actually survive? And I guess what we're seeing a bit now is more, especially in the construction, where that isn't being the case. what's your new break-even level or minimum viable sales? What do we do and how do we calculate that? And what are some of the changes that you might need to make to your product and service mix to really help you during this time as we're all starting to change? What about recruitment, HR changes that you need to make? And what other funding and government support is available? And I'm not talking just about the COVID support that's been and gone. There are other opportunities out there at the moment, whether it be related to employee and also, but specifically what you're actually undertaking. And can you get a better deal with suppliers? I mean, what's interesting, I'm seeing a lot at the moment in the construction industry is actually some of the the material costs are actually coming down. Actually, I spoke with a builder yesterday who was saying, I actually stocked up on this particular framing that they needed, and it's now about 8% cheaper than what they paid a few months ago, and it just keeps getting a bit more cheaper. So that's, I think, as we're seeing some of that supply chain issues kind of being resolved on that side as well. So what if you are looking to sell? Because you're over it, you're done, and I just want to sell. What are you looking at from that? So if you're looking to sell, what is the value of your business? And is your business really ready for sale? If you're selling at a point when you're in this exhaustion, is someone else going to actually want to buy the business? Now, I've actually seen the number of businesses up for sale definitely increase. And I'm seeing those listings going up and up. But who's wanting to buy at the moment? It's a tough market. There's the lending capacity. How are you going to do that? So, and when thinking about when you want to sell, have you done any succession planning? Have you thought about succession planning? A lot of times people think about succession planning of, when I want to retire, but they're not thinking about it early enough. When do you want out? And then how much money will you need to enjoy the desired lifestyle? You might be exhausted, but your business is, being able to fund your lifestyle and keep things going. So, and have you considered who might take it over? Is it a potential successor already within the business? Do they require grooming to kind of get into this leadership role? And do they actually want to take over? So then if you look at then, okay, I'm ready. Now what? This is the one of the challenges and the reasons why succession planning cannot be done overnight. Okay, and I get many clients who might come and say, I want to sell my business and sell it now. What's the valuation? And if we have a bit of time on our side from that perspective, then you can really help yourself on that as well. Your assets might be tied up in the business, so you might have security on different assets. Your buyer might not be ready and waiting. And in today's market, I can tell you what I'm seeing is there's a lot of people who are not looking to buy a business at the moment. It may even take years to restructure things effectively, which could be operationally effectively, but also tax effectively as well. And then you might need time to kind of groom the business or get it ready for the optimal sale value. And that's really, really important when you're on the way out. I saw one last week, an accounting firm who's looking to sell, who was approaching, and their business is in no state of wanting to be remotely appealing for the value that person wants to sell it for, that myself looking at it and saying, well, I don't know that I actually want to buy such a business. And there's a big correlation. And I think you're going to see that in a lot of businesses. The seller wants to get the value up here, and the buyer's looking and saying, there's just too much work to be done. It's not systemized and a lot of those challenges. So really looking at that kind of planning, and you'll need to manage the documentation and transfer of the business knowledge as well. So the good news, I guess, on it, and in going through that, and Paul's going to go through some of those details on how can you get yourself prepared. What I've often found when we've worked with clients during this process, because, and we've said, look, it's actually a few-year process, many of them actually start to fall in love with their business again. So it's taken some of those pain points and some of that stress off it. But what it does do is it puts them back into the driver's seat to actually say, well, yes, I am ready to sell, or no, maybe I'm not ready to sell now, but the business is operating in a whole different space to what it was operating before, and therefore they're feeling better about their business and how things are operating. So I'm going to hand you over to Paul now to go through the details around the succession planning.
Thanks very much, Shannon. So just to kick off, what is succession planning? So when we talk about succession planning, we're talking about putting in the planning in place to ensure that the business can continue to run smoothly and without interruption if the important people, that is the small business owners who are not only the owners, but also generally running the day-to-day of the business, when they move on to new opportunities. Now, new opportunities could be a different business or a new lifestyle that they want to take on without the business. They may be looking to retire, or it might be something where they're actually, could be obviously passing away, something that's unexpected, or becoming permanently incapacitated could also happen. So we need to put planning in place for things like that as well. Shannon's already mentioned, that some of the challenges facing business owners at the moment, and we'll go through what sort of reiterating on what Shannon spoke about, that by going through this succession planning process, what you're doing is essentially to try and improve the value of your business. You're actually improving the business itself, and you might learn to fall in love with your business. Think about someone wanting to come and buy your business. Are they going to pay a premium for a business that is already making you mad? So just have a thought about that and improving things in your business before you look to sell for a premium rate. Another thing to keep in mind is that you might have multiple succession plans, certainly more than one. So you might have an emergency succession plan that is put in place when a key leader needs to be replaced unexpectedly, often on death, but also in other circumstances where they're unable to fulfill their role. So what would you do in that circumstance? So a lot of these can be similar to what you would do in a long-term succession plan, in terms of making sure that systemized processes are in place, making sure you've got key team members in certain roles that can take over certain duties, in a pinch if they needed to. But another thing that we recommend, that the first thing you should have in place as an emergency succession plan, is a successor director solution, particularly if you're operating from a company, of course. So if you're operating from a company and you might be a sole director, or if you might have a couple of directors in place, each director should have a succession plan in place, or successor directors in place, so that if in the event of their death, or they become incapacitated and they can't fulfill their duties, that another director can take their role automatically. The problem being is that a company without a director may not be able to make bank payments, it may not be able to pay employees, it may not be able to make key business decisions to keep that business going. And if you're waiting through lawyers to fight over sort of who gets what in through the estate, that could be a long time, and your business could lose a lot of that value in that time. So it's really important to have a successor director who can make those key decisions in the interim and to keep that business value going, because otherwise the money that you'd be potentially leaving to the people that you want to leave your business to, it just won't be the same value that you would have expected. A long-term succession plan, on the other hand, helps the company account for anticipated changes in leadership. So it can be retiring. It could just be that you've just set up a business that you want to run for 10 years and then move on to a new challenge. So so we're going to look at how do you set up for success, and what we want to is increase the value, but also a smooth succession plan so that the business continues and improves under the second generation of owners. Stepping back a little bit, so again, planning for the worst. So, the old adage, what would happen to your business if you were hit by a bus? So hopefully we don't want that to happen to anyone, but we know it's a risk that can happen. So how would your business continue to operate? How would it be managed, and how would it be affected? Would it be able to continue in any fashion at all? How would your clients and customers be affected? And a lot of this can be, if you've got a team in place, by empowering your team members, that can actually help improve, that they could step in a time of need or in time of crisis, as well as having the successor director there as well, to have that key role, that official role within a company that makes sure that their key decisions can still be made. This is how your business can survive the worst case scenario, and also maintain or even increase its value in that period, rather than having to rush a sale through, things like that. There are other options also. We need to consider things like insurance, buy-sell agreements and things like that. Shannon and Bianca and the team, the financial planning team, can certainly help with those sorts of things. Just a bit of a mindset thing. So change is difficult. Often people are scared of change. So we'd like to talk about some mindset things about how to approach change. And that's when we're talking about succession planning, we're going to see some statistics saying that not a lot of people do succession planning. That's your opportunity to get ahead of the curve and promote your business to get a higher value than others would, because you're approaching this. So awareness, you're all on this webinar. Hopefully you're all aware of this, and if not, hopefully we'll make you aware of the challenges that you need to face in implementing a successful succession plan. Hopefully we'll also get you to the acceptance stage of change as well through this webinar, and hopefully then it's a call to action and that's really in your court, that say, well, okay, I'm going to action this and make sure that I have I can improve my business value and improve the situation for the succession plan for the next generation, however that may be. And we can help with that. We're going to talk about how we can help you with that. And one of the biggest parts we can do is we can actually hold you accountable to make sure that if you're engaging with us, we keep coming back to you and go, okay, what's the next step? Let's make sure we continue to improve the value and get your return on investment that you deserve. And also in the 5 A's of change, acknowledgement. So this is, it's really important to give ourselves a little bit of a pat on the back when we do things well. And, a lot of what we're talking about here is empowering your team. So remembering to do that to your team, that do that for your team as well, that when you give them new roles and new responsibilities, that you reward them when they do very well. Create a culture where change is a positive rather than looked at as a negative. Okay, which what we're talking about here is really getting back to what you can control in your business. There's a lot, Shannon talked about the external concerns, and they are real. And every now and again, obviously, we always need to have a little bit of a vent and say, this is not fair and I'm not happy with this, but we also need to then come back and go, okay, well, let's focus on what I control, and we can control working on our business. And a succession plan is really doing that. It's working on your business, improving your business for the ultimate sale to increase the sale value, but as we said, may get you to fall back in love with your business as well. We talked about, looking at the product service mix in a challenging time. Do we need to look at varying the service, product or service mix that we have? Do we need to lower the mix that we have to focus on what we do good, rather than worrying on other areas? Potentially, particularly if you're looking to sell in the next 2 or 3 years, we might want to get rid of the ones that aren't profitable and make sure we're highlighting profit, rather than investing in new areas, and make sure we get that profit figure to increase that valuation. Marketing communications, we can always focus on this, make sure we're contacting our clients and our customers in the right manner. Human resources, we know it's still tough out there to get good quality staff, in particularly in certain industries, accounting being one of them. And ultimately also, regularly checking in on your finance and your profitability and your cash flow. This is really important. I'm sure Shannon would agree that the clients that we see getting in trouble are the ones that put their heads in the sand and they don't look at their profitability. They're not looking at their cash flow. Can I pay what have I got coming up in the next month, 3 months, 6 months, 12 months, and can I afford that? And knowing early enough if they need a cash injection or something like that. So those that succeed and have the most success are the ones that are looking at their business constantly and looking at ways to improve and getting help when they need it. Getting back to your why. So this is another bit of a mindset thing. So why did you start your business initially? If you get back to that and start having to think about that, write some notes down, you might just find that you get that fire again inside to go, this is why I did it, and I still want to continue to do that. I've still got that passion to do that. It's also an important part of the succession plan. If you have a why, what you're doing, and also the business's why. So what's the purpose of your business? What problem is it solving for its clients or customers? What is its big audacious goal that we're trying to achieve in the business? Having that vision for the business is really important. Having that why for the business is important because it can help your team buy into that and really improve them and improve their performance. And also could be the reason why a potential successor wants to buy into your business because they see the value and that they share that similar passion that you have and want to follow with that business. So we'll get now into the succession planning overview. The key point here is that there's no one size fits all. There's no 10-step process, that we can just simply put and just go do these 10 things and you'll achieve it. It's going to be different for every business. There are steps, but the actual running of those steps is going to depend on each business. So first off, you want to define and align your business and personal goals. We always at Smart start with your personal goals. What do you want to get out of your business? And so the business is serving you rather than the other way around. So if we're talking about succession plan, and particularly, we might be talking about retirement or even a new opportunity, what do you want to sell your business for to fund your retirement? What do you need to sell it for to fund your desired retirement level and at your desired lifestyle? So that's something that our financial planning team can help you with. And once you have those personal goals, then we can align those business goals. Okay, well, to get to that valuation, we need to look at improving profit. So we need to have some goals in there to improve that. We talked about promoting your vision, your business's vision. Share that with your team, with your customers, with your suppliers, with your family, so that everyone's on the same page. It can be a really powerful thing. Identify your business strategies to achieve your objectives. Again, sharing that with your team and establishing leadership requirements. So what do you require of yourself, or what do you require of other people in your team? How can we promote them to take on more responsibility, but still have adequate controls to make sure they're doing the job well? Continuing to evaluate the team and having a look at potential successes, because one of the potential successes could be an employee from your business. Document the plan. We have a saying at work: if it's not documented, it's not done. If it's just in your head, nobody knows about it, so it's less likely to happen. So document it down, get a timeline, work with us to help document it down, and also to then help you implement the plan and keep you accountable. We can help with that with regular meetings to make sure that you're staying on track. Some statistics to consider. These are a little bit of these statistics, but I don't think they'd be changed much. They seem to resonate well with me. So only 50% of people have completed a succession plan. Of those that have completed a succession plan, 25% plan to sell. 38% will transfer management to the next generation. 36% will transfer ownership and not management to the next generation. So that's what we're seeing is that there is a plan and a desire to sell to the next family generation, and we'll look at some of the options there as well. 30% of family businesses succeed into a second generation. Sorry, there's too many S words. But interestingly and importantly, sorry, it's not in the next slide. I'm getting ahead of myself. But only 12% go into the third generation. So
we're working with a few of those, aren't we, at the moment, Paul? We've worked with a number of clients going into the second generation. We've got a few at the moment going into the third generation, which is quite exciting. Haven't had anything to the fourth generation yet. Yeah.
So your standard options for successes are generational succession, as we've talked about, to your children or other family members, selling the business on the open market. Now, that could be with a short transitional period where you hand over the business, or you can remain on as a consultant, and that can be another way to continue to earn income for yourself between, say, your selling point and retirement. Selling to a current manager or employee. You can also go and recruit a new manager or employee with the vision to eventually sell to them and have that conversation with them. The other option, the last option, is to cease to trade and liquidate the physical assets of the business. Ideally, you're on this webinar. That's not going to happen to you because you're going to have goodwill, and the goodwill is going to be of greater value than the physical assets of the business. Potential buyers. So again, family members, a competitor may want to, just to purchase greater market share. A supplier might want to integrate their business with yours. Business in a similar market. You've heard Shannon talk about how we're an accounting firm, but we've also got financial planning, mortgage broking. That can happen in several industries. An employee could want to buy it, and also could just be a first timer in the business as well. Family business. So, is this the best option? Do the next generation, do they actually want to take over? So I heard a story the other day where it had been assumed that the son would want to take over from the dad when he retired, but when it got to that point, the son said, "No way, I'm not interested in that business." And then a sudden scramble of, "Oh no, what do we do?" So it's important to have conversations early to make sure everyone's on that same page. Are they equipped and capable of taking over? So do they have the relevant skills needed, both the technical skills and the specific skills of that business, but also the business acumen and financial acumen to take over? And what if not, how do we get them to that stage where they are going to be equipped? What if more than one family member wants to take over? and are all family members in agreement that this is a good option. So these are really important things to have conversations to have. And it's a thing of taking it out of the business owner's head and getting it down to a document plan and talking to the stakeholders to make sure everyone's on the same page. Here's a slide that I thought was about 4 slides ago. So only 12% of family businesses survive into the 3rd generation. So this is why it's so important to handle that succession plan very well, even for a family business. You know, it's not just as simple as I'll just hand off to the next generation. You do need to go through a process and think about how it's done well. Is it the best option for the business? Does the next generation really want to lead it? You know, these are things that are really important to consider. So we talked about, is the proposed successor capable? How's the transaction going to be financed if you're selling to a child? Like, are they going to buy you out, and how are they going to be able to finance that? Control transfer issues. You know, we've heard plenty of examples, Shannon, I'm sure you'd agree, where, you know, the parents are going out and the kids are coming in, and there's fighting and infighting about how the business should be run, and key decisions in the business. How is that going to be managed? So what needs to happen is you need good processes to be followed. You need shareholder agreements to consider what if scenarios. You need to clearly define the roles in the business and how that transfer is going to work. Again, documenting things so everyone's on the same page and having an understanding. Using independent advisors so we can facilitate that, and we've done that in the past where we have, you know, the outgoing and the incoming owners in the same meeting, the same quarterly meetings or monthly meetings, acting sort of as a family advisory board where we can help you make key decisions in your business and sort of make sure everyone keeps on track in their defined roles, and that we keep processing and documenting as we go. So where do I start? So the planning process, we start the planning process. Again, we've talked about, we define your goals, both personal and business, and make sure they're aligned. We establish the vision for our business, really important, so that we can share that with our team, family members, share it with us, share it with your advisors. This is my vision for the business, and, you know, then we can get behind you and help you. Meeting with essential advisors, that starts with us. It might be some financial planning as well, if you need to establish your personal goals, particularly if you're looking into retirement, is sort of part of your succession plan. Identifying factors that may influence the plan. Now, that could be economic factors. What if we're selling in a downturn? We obviously would rather sell in an economic state where the business is going to be going well, because it's going to be likely more profitable. Is your industry open to legislative changes that could affect the value of your business as well? There's many other factors, so we need to have to think about that. Researching, deciding the most appropriate succession options. So, are we going to hand off to the next generation? Are we going to go and sell on the open market, or are we going to bring in a successor? What's work? That's going to depend on your personal situation. It's also going to be very industry specific. So if you've got a really niche industry, then the open market might not be the best place. You might want to go and look for that successor early on. And that's where, you know, say, how early should we start the process? It might be 5 years or greater. I mean, you should always have some sort of succession plan in mind, just in case. Creating your succession timeline and documenting succession plan. Again, this is something that we can absolutely help you with. Again, if you're not documenting, it's not done. It's not going to happen if it's just in your head. Nobody knows about it. So if you're not there to action it, who's going to be able to help you action it? So it needs to be documented. We need to start that process. Stage 2 is really about grooming your business for sale. So we're getting your internal organisation or structure right. So let's look at your team, who can step up into key roles. You know, and so we're talking about here taking pressure off you as the business owner, so that you can enjoy your business better. You can focus on your business rather than working in the business. And you can also, it's going to be more likely to sell at a premium to a potential buyer, because they can look at it and go see the strong systems in place. Completing internal financial and operational due diligence is really important. So, you know, it's great. You know, you get a deal, you know, on principle, but then they go to do their due diligence and they see there's lots of financial problems, there's cash flow problems, there's lots of systems that need upgrading, and they decide that it's going to cost too much money to update the systems to make this valuable. So the potential buyer could walk away. Having your business valued by an external professional, which we can do for you. Do you really know how much your business is worth? Some industries that can be a reasonably simple calculation, but others it can be just a guess. So having that valued, in part of that process is we can actually prepare documents that we can say, well, this is why we valued it and this is how good this business is, and we can then provide that to a potential buyer as well. Another benefit of the valuation is that then we can talk about, well, why this is why it's valued, and if you want that value to increase, these are the things that you need to do. So we can put clear objectives in place for your business. And from that, then we go to grooming your business for sale, and including financial forecasting. We need a profit. Your business value is likely going to come from profit projections or from your actual profit. So we need to look at increasing that profit. And how do we do that? Stage 3 will be really implementing those the restructuring requirements within your team. That might also be on your tax structures and things like that, if we need to tidy some things up as well. Financing and tidying up the balance sheet. So what assets of the business are we going to sell? Do we need to take some assets out of the business? Potentially you might look at things like property or even plant and equipment. If it's a significant amount, where you might take that out of the business and actually lease that to the new business owner, and that might be another source of funding for ongoing funding for your retirement. Clearing up any small liabilities, loans, things like that, and also your own loans, to working out how that's going to work. Talked about updating insurances and wills. Obviously, we want insurances will help with that emergency succession plan, but also we're going to have a look at wills. We want to make sure your wills are aligned with your objectives of your succession plan as well. Tax planning is really important, as it is with any CGT or capital gains tax that we do. So whether it's property or whether it's business, a business sale, we always recommend getting the tax calculation done up front. That way you can plan for it and know what you're likely going to be hit slug for tax once you do actually make the sale. You're going to have to, generally, what I always say, you're going to have to pay for it anyway, whether it's at the back end or at the start. If you just pay for it at the start, then you get some more knowledge and planning up front for what it's likely to be. It could also be, just to mention, particularly with small business CGT, it's the concessions for small business capital gains is very generous, but also extremely complicated. And it may be that you need time to restructure things to get it right. Once we do all these things, then we can go to look at packaging your business for sale. Stage 4, if you're not taking it to transferring to the second generation, then we're looking at taking your business to market, using your broker, filtering inquiries, looking at signing an agreement, making sure we're getting the appropriate legal advice, and then we've got the settlement and post-settlement transitional requirements. And hopefully from all this, you've got the maximum value from your business, and your business has got a good foothold to continue on into the second, third, and fourth generations. So just to quickly recap, a clear succession process. Important considerations: what capital must you achieve for your desired lifestyle if you're going to retire, or for whatever comes next? What do you want to achieve? So we need to know that first, so we've got goals to work towards. Use third parties to facilitate. They're going to hold you accountable. We often look at our own businesses and say how, and what we're doing is great, but sometimes that fresh look can be really helpful in anything we do. Timeline is the biggest constraint. We don't want to, the longer the time frame, the better. We can make more changes and improve the business value. There is no one-size-fits-all succession plan, which is why we have this webinar that we talk about a lot of different things. We need to focus on different things, come in different industry and different situations. So really important to really, I recommend action a succession process, start thinking about what it looks like for you. And I'll hand back now to Shannon, who's going to talk about how to enhance your business value for when you do sell.
Thank you, Paul. Yes, so definitely talking about getting yourself ready for that potential sale. And I always say, when you go into business, you always should have the exit in mind. What is the long-term plan? And that comes down to building that succession plan and being able to look and say, well, this is how I want to exit. So we always say, structure your business how you want it to be structured towards the end, so that you can always be working towards that goal. You may actually choose not to actually sell it at that particular point, but at least you're being able to structure yourself. So one thing when I'm looking at preparing a business for style is starting to think about the things that you should be doing and things that you shouldn't be doing. So defining your objectives of what you're wanting to achieve, start working a bit more on your business, and then look at the structure and the overall plan of your business and how have you got that framework in place. I worked as, and I'm sure many of us did, at McDonald's, for many years, all through, school and then through uni. But one thing that McDonald's did really well is their systems and processes. Now, that's something I definitely learned from them. And I have definitely put that into our business, is the systems and processes in place so that we can make sure that you've got all the checks and balances. But you're looking then at a business, someone looking into that business and saying, would I like to buy that business? You've got that structure in place. You've got a long-term plan. We have a 1, 3, 5 year and the longer term plan in place that we're constantly working towards. Even when we're looking at that 1 to 2 year plan, what we often find is by putting that plan in place, we actually often overachieve because it's so far and it's so close in front of us that we're keeping ourselves focused on that. Looking at the value enhancement and where can you, if you take a look at your business, where can you potentially add extra value? Have you considered what, maybe it's some of your products, maybe it's some of your services. Are you spending too much time on services that are not providing a significant economic value? Is there another opportunity coming up that you might be able to tap into to help enhance the value, or even things that are changing in the market? What can you do to make sure that you're potentially that leader in the market, and learn to say no and where to delegate? So really looking at getting yourself ready from a business perspective so that someone really will want to buy your business because it looks like a business that they can step into. Maybe you've got a lot of the team in there managing it. So really looking from that perspective at the leadership side and looking at yourself as that leader and saying, well, what are some of the key habits that I need to start doing as that leader? Because often we get so busy, but dedicating time to work on the business regularly, whether it's weekly and a certain fixed time, make it at a time when you're at your peak, not at the end of the day when you're exhausted, when you might be looking at it doing there. And keep your plan up to date. When we do business plans with clients, we often do I call it a 1 page. It is 2-sided, but 1 page business plan so that we've got them constantly moving forward and updating that plan. And it's not a business plan that you put in the bottom drawer and never look at it again. It's something that you keep it evolving and taking the time also outside of the business. I think quite a number of us did this in January this year, where everyone had quite a decent break, but just from your own wellbeing perspective as well. So looking at that, when we look at the systems of the business, so you've got the leadership side. I often like to say that there's 10 hats in every business, and actually, it's like kind of different business departments. The problem that you often find as a small business, and I know when I started Smart, I actually wore every single one of those 10 hats. So looking at those different 10 hats in the business, and most businesses would have this. You've got your shareholders, that's probably yourself. The director, that's probably yourself, and you might be also the leadership team as well. Looking at your product, service development, you've got operations, so making it happen, marketing, sales, finance, HR, and admin and IT. But it's really important to actually start to think about those different hats in the business. Now, if I flip those onto, and I like pictures, a bit more of an organizational chart to say we have our strategic departments of the business, being the shareholders and the directors. Now that potentially is yourself, that's the strategic, and that's where you need to take some of that time out of your business so that you can actually do the strategic work. Looking at the operational side of things, you might have then the leadership. That may also be yourself, or who have you got within the business that you can start to bring up to that leadership role so that you can act as that strategic director and shareholder. But starting with each of the different areas of your business and saying, okay, what can I actually empower others, get systems in place, or maybe even outsource because it's not the best use of the time in the business, or I don't need a full-time resource. A very common one, human resources. That might be something that you might partner with someone to assist you to be able to do that. Finance is another easy one. We often act as that outsourced bookkeeping function, quasi CFO for clients, and also then maybe even on the technology side. Obviously, admin, you'll often have that internally, but trying to go through each of the different areas of your business and putting systems and processes in place, and as part of the goals when we're looking at the business planning, it might be, we work with the clients, by the end of this quarter, we want to have process and systemize our sales function. Now, when we say systemize, it's not about that you have no flexibility in how things are done, but it's about putting systems in place, whether that be up onto a digital platform, maybe it's into a Word doc, but, maybe putting some videos with it, but having it so that if someone from your team left tomorrow, or you're not able to do it, and the only way you can free up your time is if you empower others by maybe giving them those systems and processes so that you can actually start to delegate all of those tasks and really step yourself up into that strategic area, whilst, obviously still helping on the operational side, but that's where you're going to start to get a business that is then really attractive for someone to buy. And I always just think back to the McDonald's analogy, the systems and processes that they had in place ensure we all get a burger that looks the same as what they intended it to be. Now, obviously you personalize things with the services or products you may be providing, but to ensure that consistency, and it also helps protect your business if someone was to leave, but also enables you to potentially go on holidays so that you've got others that are able to keep those functions going. And as time goes on, you will look at those different functionalities as to what are you comfortable with actually giving up to someone else to be doing and for you to be managing that. So comes into get clarity around the different roles. Team members tend to want to perform well. The more clarity you have around their roles, the goals that you want to achieve, what the business wants to achieve out of those particular roles, you'll actually find them better, the better the team perform. Improve your delegation and personal development. And often when we're working with clients on that, we'll be saying, don't do that. You need to push it down, empower them. They might make a mistake once, you'll help correct it. And then they'll be fine the second time and the third time, and it'll release time. And it is hard when you run your own business. It is a bit like your own baby. You've had it from early days, and giving up some of that to others. But it's the only way you're going to get some of your time back and be able to move more into that strategic side to really help the business. Make a really clear accountability line so that that person undertaking that function. As I see business owners, a lot try to micromanage, because that's how they always used to do it. Give direction, allow some leeway as to what authority they have in different areas to enable them and equip them to be able to do that. And then look at the resourcing gaps. What is it that you might be able to do a particular task, or one of your team can, but maybe it's better to have that part outsourced and have someone else do that particular function. What this then does actually provide you with the opportunity of then scaling out up without you trying to do it all. And that's where your business is going to, from a value perspective, that's where you're going to really see the benefit coming through from that side of thing. Looking at a succession plan, going through what Paul's already said, and I know we've had a number of people join since we've already started. Don't worry, we are recording this webinar, so Friday night Netflix, you can watch this instead. But looking back on your succession plan, it leaves so much less to chance, and plan where you want to go. Where is it? And how long is that going to take, and understand how you can make it happen. And we've worked with a number of clients where we've had that timing, and it's been a really great opportunity to actually build the wealth of the business, get in a position where we want it to be for them to potentially sell. And actually, many times they've actually decided to keep doing it and get another management in there and keep that going. And realize your family expectations, and I guess I kind of then say, and relax, you've got a plan, and know that potentially those dreams are then achievable if you keep sticking to that plan. I know many of us have had plans over the last few years, and just as things get going, we've had, all these challenges keep throwing at us. But that's probably, I guess, life of small business at the moment, and life of business in general. If you do need some help, how we can help you, we can help you with even putting together a business valuation. They're from 2,500. If it is a business valuation going to sale, we usually put a bit more docs around that, so that's a bit more expensive. But putting a business valuation to say, here's where your business is worth today. What would you like it to be worth, and what do we need to do to get to that? We work with a lot of clients on quarterly CFO coaching. We have a number of clients on monthly CFO coaching, but you can also start on quarterly CFO coaching. I know you will never love accounting as much as Paul and I do, but we will certainly try and get you to maybe like it a little bit, or at least empower you to understand your numbers a lot more, so that you can make some really better decisions and some quicker decisions. Putting together a succession planning, we'll pull some of that information, but really putting that plan together for you. And then depending on how much work you're going to do, what you need us to do as well. And another one we've been seeing a lot of our clients ask us about is KPIs. What are those key performance indicators that you should be looking at that will help with your business? And then also the organizational review. You've got, maybe you're struggling to hire people. Maybe you've got feeling like you've got some people, spinning wheels, not doing as much, but coming in and actually going through the organization and working out what are the right roles that you need in the business. Who are those people that you've got in the business now? Are they on the right seat of the bus, is what I often like to say. Are they in that the right part that they should be in? Should there be any changes? Are there some efficiency? And just to identify some of the gaps that might be there as well. So we can help you with any of those different areas if that's something that you need help with. I'm going to open it now to questions. I see we've had a few questions pop up as we've come along. So let me just get into the questions. It's gone. You can put it in the questions. I've got one in. Just if you put all the questions in the Q&A. Okay, that was you actually letting people know. That's great. Thank you, Paul.
That was me, sorry.
Yeah, that's good. No, the question, I just sort of wanted to chat. So in the questions, so we just got one of the questions. What if you only have a few months to sell? So I guess if you've only got a few months to sell, I think that's going to be, and I'll use the analogy, if you've got a house and you need to sell it straight away, how are you going to be able to prepare that house for sale, and what price do you expect to get? Whereas if you had a longer period of time to prepare that house for sale, it's going to look a lot better and appealing to that potential buyer. So if you do only have a few months to sell, and we have had some of those situations, some have been due to health situations, and that what we've tried to do in those situations is really come in and see what we can put in place to kind of keep that business going should that person get even more sicker, so that we've actually got, maybe it is hiring more people, maybe it is getting some systems and processes together, but it's also a matter of, if you are looking to sell and sell it quickly, you're going to need to be flexible on what your expectations are on the pricing. That business I talked about earlier, was wanting a price up here. They want to sell within a month. And, their expectations are up here, and, we were thinking it's down here, big gap, and you've got, they want to actually have it gone in a month. The other question I have, if I have an employee who will want to buy, but they don't have the money, that is something we commonly see. And especially at the moment with the banks, what we're seeing with a lot of the challenges is the banks are not wanting to lend on a business purchase, depending on the size of the business and the ongoing profitability of the business. But often in the small business space, they're a lot tighter on that. The banks want to actually have some security behind that, i.e. access to the house. Now, if someone has a house that they've got the equity in, that they can use that to secure the loan for the business, that's okay. If they don't have that situation, the other alternative, which does pose a little bit of a risk from the seller's perspective, is whether you do something like vendor finance. I've got one that we're working with at the moment that is going through vendor finance over the next 3 years. Now, what they're doing in that situation, the owner, the current existing owner, is staying on for that 3-year period and working, reducing their schedule and tapering off over 3 years. The employee who's been with them 15 plus years is kind of gradually increasing what they're buying over the 3 years. So there's a staggered buy-in. The profits that they're earning each year over these next few years based on their ownership is then going towards paying off the loan from the vendor. So they're not actually, the purchaser is getting their wage, but they're not getting the profits as that's getting contributed. So, over this 3-year period, that will transition at that time. So that may be something. It depends on you as a seller. Do you want to plan to stay in the business and stagger that through? That can actually, and that can be one of the key things that we actually advised this particular client. They were happy not to just finish work straight away. They're happy for this kind of semi-retirement. It works as a win-win for both parties, but it actually increased the value of their business because it actually keeps that kind of longevity of the business and that transition to the employee, as opposed to, ripping the Band-Aid off and that person's gone. So I think that's a successful win. Okay, another one was, I am exhausted. Yeah, probably we all were too. What if I want to sell now? I guess that comes a bit back to maybe the question was sent in before the other one. But if you only have a few months to sell, I guess, Paul, you've got a great comment when someone said to you that they were exhausted on what do you sell, or how do you convince someone to buy the business?
Yeah, I think I mentioned that who's going to pay a premium if you've had enough of your business. So
so how do you convince someone to buy it if you've had enough? So that probably, and that's where we kind of put in the comments around the mindset and getting yourself looking at your business in a different angle to try and really get that positivity back in it, because no one's going to want to buy your business if you're miserable about it as well. I don't seem to have I'll just any more questions if anyone's got any other questions at all. Doesn't seem to be. No.
So I can answer something.
Yeah, so if anyone has any, feel free to reach out. We do have some more webinars coming up. Superannuation Unpacked. So that one's going to be a great one. I love super. And then Gen Z financial roadmap. So if you've got any, whether in the Gen Z, that's going to be a great one for them as well. So you can go onto our website and register for those. Also, as I said, you've probably watched everything on Netflix these days. We do have our YouTube channel. We have many different topics. Buying a property in SMSF. Is an SMSF right for you? Many other different business topics as well. We actually have one of our videos has gone 41,000 views. So must be doing something right. One's up about 15,000. So so that's there if you've got any topics. If you want us to run any other webinars, do let us know if there's a particular topic you don't think we've covered. But thanks very much, everyone, for joining today. Great to have you on board with us, and welcome to those that haven't been with Smart before. There's quite a number of new people on board. But if you've got any questions, feel free to reach out and we'll be happy to help you.
Thank you.
Thanks.